Ladies and gentlemen, good day and welcome to Privi Speciality Chemicals Limited Q2 and H1FY26 earnings conference call. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involves risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Today from the management side we have with us Mr. R.S. Rajan, President, Mr. Narayan S. Iyer, Chief Financial Officer, Mr. Sanjeev Patil, Executive VP, Strategy and Biotechnology, Ms. Ashwini S. Shah, Company Secretary and SGA Investor Relations Advisor. I now hand the conference over to Mr. R.S. Rajan, President of Privi Speciality Chemicals Limited. Thank you and over to you, sir.
Thank you. Good evening, ladies and gentlemen, and welcome to Privi's Quarter 2 and H1 Financial Year 26 earnings call. The results of this quarter and indeed the upwardly exhilarating journey so far is the manifestation of the vision of our Chairman Managing Director, Mr. Mahesh Babani, and his guidance with relentless passion, well supported by the team Privi. This quarter marks a moment of immense pride for all of us as we have surpassed all previous financial and operating parameters. The growth in revenues and higher profits have been driven by volume growth in our flagship products and the contribution from newly introduced products. We continue our pursuit for process intensification and new capacity creation. We continue to remain as a trusted partner to leading fragrance and FMCG companies worldwide. It gives me immense pleasure to inform that Privi was awarded the first prize in the large company category at the IFIAT 2025 conference held in Gothenburg, Sweden for advanced bio-based aroma ingredient solutions under the Sustainability Awards. This achievement comes in addition to our platinum rating from EcoVadis, the highest global recognition for ESG excellence, placing us amongst the top 1% of companies worldwide. These awards stand as a testament to our strong belief on sustainability and responsible business practices. As we look ahead, our strategic priorities remain steadfast to build a world-class aroma chemicals company that leads with purpose, executes with precision, and grows responsibly. I'm joined today by our CFO, Mr. Narayan Iyer, and Executive Vice President, Mr. Sanjeev Patil, and they will explain the progress made during the quarter and the way forward in detail. With this, I would now like to hand over to Mr. Sanjeev Patil to share operational details for the quarter.
Thank you, Mr. Rajan. Good evening, ladies and gentlemen. The growth in consolidated total income of 20% between Quarter 2 and Quarter 1 is driven by growth in our flagship products and additional contribution from newly introduced products. We were in a position to complete part of our phase 1 expansion ahead of schedule, which partially helped us in generating the growth and will also provide the impetus for growth going forward. Despite the unfavorable global headwinds caused by the tariff-related uncertainties, we continue to maintain and increase our market share in key products. Over the years, we have always looked inward to improve our profitability. Our efforts in driving operational excellence by improvement in process yield, lower operating costs, optimum manpower utilization, and the ongoing advantage of backward integration have paved the way for sustained improvement in EBITDA margin upward of 20% of revenue for the past 10 quarters. We will continue our efforts in maintaining and improving these ratios. As we have worked on process intensification, extracting additional production with debottlenecking involving minimum capex, our return on capital has steadily improved. We continue to work on the expansion projects to achieve our goals of 5K, 1K over the next 3 to 4 years. With this, I now hand over to our CFO, Mr. Narayan S. Iyer, to share financial highlights for the quarter. Thank you.
Thank you, Sanjeev, and a warm welcome to all of you out there. It's a great privilege to address all of you on a very, very strong performance that the company has been able to outperform all its previous numbers. The first half of the financial year 25-26 has been a period of all-time high performance, and we remain confident that Privi is well positioned to sustain its growth momentum in the coming periods. Let me give you a glimpse on the key highlights for the said quarter and the first half. Our performance was driven by increasing demand across the product portfolio and a favorable product mix. Our JV with Privi is also ramping up well, and we expect meaningful contributions to come from this joint venture in a few years from now. As informed earlier, this JV is of utmost strategic importance to the company. EBITDA margin improvement was led by continuous innovation, value addition through byproducts, higher volumes. In fact, it's the record volumes in this particular quarter that Privi has been able to achieve. Controlling expenses across all parameters, as Sanjeev informed, and debottlenecking of critical processes, which led to improved EBITDA margins. During the said quarter, we have also received from the Gujarat government under the state incentive an amount of rupees 5.59 crores. Ladies and gentlemen, for the first 6 months, in totality, we have received about 9 crores from the Maharashtra government and Gujarat governments respectively. Please note, our company is poised to get state incentives for the capex investment that the company had made from Maharashtra government for 15 years and from Gujarat government for 7 years against sales made within the state. So this is going to be on a continuous basis going forward also. Let me come to the capex update. As you all are aware, Privi is embarked upon a capex plan which is split under 3 phases. So part 1 of the phase 1 was completed before schedule, and the balance portion is progressing as planned and is expected to be completed by end of financial year 25-26. This shall increase our production capacity from 48,000 metric tons to 54,000 metric tons for all our existing products. There have been a calibrated effort to improve the overall working capital cycle, and we are pleased to say that the same has started reflecting in overall cycles and better return ratios. In fact, we in our earlier calls had stated that our endeavor and zeal will be to get a working capital cycle around the 120-125 days. Let me state that we are already at 124 as a number, and I think we should be in a position to maintain and sustain this. Talking about the numbers and the financial highlights, let me start with the quarter 2 for the financial year 25-26. The total income for the quarter July to September stood at rupees 678.82 crores with a growth of 26% on a year-on-year basis. EBITDA achieved during this period was an all-time record high of 182.14 crores, which is a 59% growth on a year-on-year basis. EBITDA margins achieved for the quarter was 26.83%. Profit after tax for the quarter achieved was 90.21 crores as against 44.84 crores achieved in the Q2 of financial year 25. All the above numbers are on a consolidated basis. Coming for the first half of 25-26. The corresponding numbers are the overall income that the company was able to achieve is around rupees 1,246.08 crores, which is a growth of 24% on a year-on-year basis. EBITDA for the period achieved is rupees 323.19 crores with a growth of 53% on a year-on-year basis. EBITDA margins for the first half of 25-26 is 25.94%. Profit after tax for the first half of 25-26 is rupees 147.76 crores, which shows a growth of 94% over the previous year. Our net working capital, as indicated, has improved from 136 days that we have achieved in March 25, and as on September it was 124 days. To keep all the investors also happy, we have reduced our overall debt by 44 crores, and the net debt standing as on September 25 is rupees 1,020 crores. With the planned capacity expansion of existing products and introduction of new specialty products going forward, our company has established a clear roadmap, and we are on track to achieve our visionary chairman's vision of rupees 5,000 crores of revenue and 1,000 crores of EBITDA over the next 3 to 4 years, representing a growth of more than 2x. This is a great achievement and a vision that all of us in Privi believe and trust on our CMD, Mr. Mahesh Babani's vision. With this, I would like to conclude and open the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohan Mehta from Fimcom Family Office. Please go ahead.
Hi, am I audible?
Yes.
Yeah. Yes.
Perfect. Thank you so much for the opportunity and congratulations on a great set of numbers. So, firstly, I wanted to understand how has the revenue run rate been in the months of October and currently November? Has it remained broadly in line with the trend you have seen so far this year, or are you noticing any uptick or any softness in key product categories?
The answer is that we have not seen any, downfall in the revenue in the month of October. November also we feel our contracts are in place and we should be in a position to, maintain our run rate of sales that we are poised to achieve.
Okay. And, with the transition to continuous manufacturing and also the fact that you have improved your value-added product mix, is there any new range of sustainable EBITDA margins or gross margins that, you'd like to share?
Yeah, so as you see the trend, we have improved our margins steadily, inexorably for the last 10 quarters, and we will endeavor to work in maintaining the EBITDA margin between 24 to 26%. So that's what we are working on, and that's what we can tell you.
Okay. And lastly, on the state incentives, I just wanted a clarification. So the amount you had mentioned from Gujarat government was about 5.59 crores, and what was it from Maharashtra government?
Maharashtra was 3.41 crores.
Okay, and I wanted to know how is this being accounted for in the P&L? Is it making our margins look inflated? I'm just trying to understand the accounting behind this.
Okay, so to answer this, we are recognizing this as an operating income in our financials. In the first quarter, we happened to receive from Maharashtra government, and in the second quarter, we have received this from the Gujarat government, in fact. So whatever we get this gets added to the revenue, and this is a direct margin for us because these are against the past expenses that we had incurred when we had set up the CAPEXs, in fact.
Okay. I got that. Thank you so much for the clarification, and wishing you all the best.
Thank you, Ron.
Thank you. The next question is from the line of Archit Joshi from Nuvama. Please go ahead.
Hi, good evening, gentlemen, and thanks for the opportunity, and congrats on a stellar quarter. The first question on understanding a bit more on our product portfolio. So we happen to have two very strong pillars in our portfolio, which is dihydro and amber fluors. And any particular product or maybe a range of products that you might want to call out, which could become as sizable as these products to drive further growth that we are anticipating to reach the visionary target that we have set up for the company.
Yeah. So we are working. These two products, as you rightly identified, are the two pillars of this company. Okay. And going forward, we are adding many more products. Our idea is that over a period of next few years, we want to reduce the contribution from a particular product to around 10% max, so that our dependency on a particular product comes down, and that's what we are working on. So we are not just working on two wheels or two engines. Double engine nahi hai. We are trying to add many more engines so that the growth perpetuates.
Got it, sir. While we appreciate that, given the size of this industry, I just wanted to kind of understand if there are any products which can, become as sizable as these, or would it be like a long tail of products which, can individually contribute to smaller amounts, let's say in the range of 5-7% of the top line. So is it the tail that we are focusing on, or is it that there are products which can scale up in the upcoming portfolio or maybe the existing one? So that's what I was trying to get to.
Okay, sure. So we are focusing on not on tail, but on the entire body. Okay, so there are multiple products we are working on, but as you will understand that we do not want to spell out our strategies right here. So we are working on all those strategies, and not only tail, but we are working on the entire body, so that there would be at least about 10 odd products which would contribute very well to the overall product mix.
Got it, sir. Appreciate that.
Yeah.
Secondly, if we could speak of a little more nuances with regards to the industry that we are catering to. I believe the fragrance industry will be again divided into multiple parts. Let's say perfumes, or maybe something going in cosmetics as a fragrance, or talcum powders, or soaps, or shampoos. Within that, where is it that we are seeing the maximum growth coming in? Especially second quarter being such a strong one. Is there a change in trend that you have observed, or any particular industry that is, giving us the tailwind that we are witnessing right now?
Yeah.
Any color on that? Yeah.
So that we cannot give you any color on that, because those are things which our customers would answer. Okay. What you can see within India is, like, for example, you are seeing that overall demand for fragrance, in terms of deodorant, shampoos, soaps, detergents, everything is going up. Even in detergents also we are seeing that you see a lot of ads wherein they are talking about the aroma or the olfactive senses of the detergent, and it retains the good smell. So, but we cannot throw any color on that, because we supply to our customers. What we can tell you is that we are seeing robust growth in the products that we are making, and that's the whole thing, And the other thing is that, the demography of India is such that there is an upward surge there is a change in lifestyle, wherein, the demand for fragrances and other products is increasing substantially. That is where we see the growth, but our growth is routed through our customers, the F&F players, and that's where it is.
Got it, sir. And anything on the export side of the business, I believe we do business with almost all the top 4-5 MNC formulators, the likes of Jivudan, I mean. How is the uptake on that account, and any inroads that we have made in new products or portfolios with them on the export side?
Well, it is not 5, Archit. Hi, Narayan here to answer you. We are supplying to all the top 15 blenders of the world, and we also supply to 5 major FMCG companies like P&G, Henkel, Reckitt. We have seen improved and increased demand from across all of these companies that we talk about. Not just these companies, but even the smaller fragrance houses and the Indian customers also. We have seen an increase in the offtake, which all substantiates our belief that definitely people are moving more and more to fragrance-oriented or smell-oriented products, and that's why the demand is increasing steadily, in fact. Here.
Sure, sir. Last one from me. Sorry to extend this conversation, but just wanted to understand, structurally speaking, are we witnessing any visible shifts in supply chain even in this industry, wherein Indian vendors are preferred more over somebody else? Is that also a trend that one should contemplate on?
Ajit, to some extent, taking the cue from our earlier quarter investor call, definitely there is, a China plus one shift which is happening where, most of our customers, being Europeans and the developed nations, are looking at a sustainable player, and Privi definitely has an advantage with backward integration in place, and we are in a position to offer them prices for a longer period of time with the back-to-back offering that we have. And secondly, with as Mr. Rajan pointed out and has informed all of us with regard to the sustainability thrust that Privi gives upon, and we've been conferred several awards, we do feel and find that most of the large players would definitely like to buy from players like us, and that's a shift that we have seen the last couple of years, in fact.
Sure, sir. I'll come back in the queue for further questions. Thanks, and all the best for the ensuing quarter.
Thank you, Archit.
Thank you. The next question is from the line of Veer Vadera from Niveshaay. Please go ahead.
Yeah, am I audible?
Yeah.
So my first question was on the core capex, that the PPT mentions that the capacity upgrade is ahead of schedule. Could you please elaborate on where you stand today? Like, when will the additional 6,000 metric ton per annum be fully available? And how should we think about the ramp up and its impact on growth and margins? Also, an update on the Ratnagiri plant. What is the current status, and by when do you expect it to be live and contributing eventually?
Okay. Yeah, as informed, the additional capacity of 6,000 should be up and running by end of December. So you can expect the growth to start coming from January onwards. That's been our endeavor and zeal, so that when we go for our contracts for the next year, we are in a position to offer the additional volumes that we have poised to set up. Second, to answer about the Ratnagiri plant, as you are aware, we are in already filed our applications for the scheme of merger and amalgamation, and post the NCLT order coming around only, we will be in a position to consolidate on the parent company. As of now, it's an associate company and doing its own business.
Okay. And on Privi Biotech, since that capex is also ahead of schedule, when do you envisage the commercial operation starting, and at what initial utilization level? Additionally, can you please share anything on the next phase of new product capex planned under Privi Biotech?
Mr. Vadera, Privi Biotechnology is a wholly owned subsidiary of the parent company, which is purely doing research and development work. This is a company not meant to do any revenue. It is only meant to do research activities using the biotechnology route for the parent company. So whatever inputs we get from this company, that will get implemented in the parent company, which is what I am going to set up over the next 3 to 4 years to take our company to the 5K, 1K vision.
Okay. And the products like Amber, Woody and Sensor.
Hello, sir. Sorry to interrupt, but I may request you to rejoin the queue for follow-up questions.
Okay. Thank you.
Thank you. The next question is from the line of Rohit Nagraj from 361 Capital. Please go ahead.
Thanks for the opportunity and congratulations on a very robust set of numbers and consistency thereof. So first question, in terms of incremental product pipeline, so we are expanding the capacity, but in terms of new product launches, how are we placed for the next 2-3 years? And these products, will they be catering to the existing set of customers, or we are looking at some diversification? If you could throw some light, that will give us more visibility in terms of the sustainability of the performance. Thank you.
Sure. So we have a very robust pipeline of products which will be operational over the next 15 months or so, which is a mix of products which are typical of Privi product range, which is reasonably large volume and EBITDA, gross margin which are in the range of 30% and more. And then there are about 10 odd specialty molecules that we are working on, which obviously are high value and high margin products. So it is a proper mix of these two, and we will see contribution from these products coming up over the next 12 to 15 months. Those projects will be completed in that period of time, and from there you will get these contributions. Answering your question about where these products will be sold, so majority of the products are for the same F&F industry, so it's the same customers who would be procuring these products. Only few of the products, they have applications within the F&F industry, but they also have applications beyond F&F industry, so those would be sold to, for example, pharma industry or to electronic chip manufacturing. So those are the areas in which we'll be selling those products.
Sure. That gives us a lot of confidence. So second question in terms of the Privi Biotech. So are there any products which are commercialized from here? And if yes, which and all are they? And in terms of pipeline, how are we looking at those products which are currently in R&D to get commercialized over the next maybe 3 to 5 years? Some roadmap. Yeah. Thank you.
Yeah. So Privi, some of the products which, the technological platform that Privi Biotechnology has given, based on that we have commercialized some products now, which some of them have started production in the last month or so. And going forward, now we have moved from gram level to kilogram level to tens of kilogram level, because understand that these are very special technologies. We would be among the top, first few companies globally to have these products coming from bio waste. So those efforts are on, and as we see it, over the next 15 months time, we will be able to put up a small demonstration plant which will be in terms of a few tons of material, and that's what will finally pave a way for subsequent growth. But we are on a very positive track.
Sure. So just lastly, one clarification and one suggestion. So clarification, when we said that our EBITDA margin target is 24 to 26%, does it also include the part of incentive? And a suggestion, as a good corporate governance practice, if we could incorporate the amount of incentives that we get on a quarterly basis in a note to accounts or probably in the presentation, it would be really good for the analysts to get a broader perspective on how the margins are moving. Thank you, sir.
Rohit, noted your point. So to answer that, it was clarified also when I happened to talk about the numbers. And second, you should also understand that it is not a one-time incentive that we are talking about, as mentioned, this is going to be over a 15-year period that we are going to get these incentives. So it's not that as an investor, as an analyst, I would request that, to take note that this is actually an operating income which the company for the next 15 years, and we are very confident that we will also get the status of the ultra mega. So the moment we go for the ultra mega, this incentive will be available to us over a 20-year period. I believe it is a good long period. So this needs to be treated as a part of the integral EBITDA margins. And to answer, yes, as of now, the 24-26% that we are talking about includes the state incentive that we are poised to get.
Thanks a lot for answering all the questions and all the best, sir.
Thank you.
Thank you, Rohit.
Thank you. The next question is from the line of Pritesh from Lucky Investment. Please go ahead.
Sir, if you could tell us the capacity utilization that you would be in the H1. From the deck, I see a 48,000 ton capacity. So what will be the capacity utilization in H1? Second, on the H1, what will be your volume growth for us to understand the depth of the price in the volume?
Okay. So to answer you precisely, our capacity utilization in the first half, both quarter 1 and quarter 2 put together is about 90-odd%, 92% exactly. And with 48,000 being our overall capacity, the breakup of the increase in the revenue for the first 6 months primarily is on account of the volume increase. Over the last year, that volume increase should be about 17-odd%, and price increase contributes about 8 to 10% in that.
And I missed that incentive number. Can you tell the H126 incentive that you would have booked?
Total H1 that I booked is about 9 crores, close to 8.96 odd crores or so. And in this quarter, we got from Gujarat. Last quarter, we had received from Maharashtra, in fact.
And what will be the annual that you will book annually?
Sir, it depends on the sale that we make in respective states. So broadly, we feel an amount anywhere between 7 and 10 crores on an annualized basis, you should be getting it, in fact.
Okay. Thank you.
Welcome.
Thank you. Ladies and gentlemen, in order to ask a question, you may press star and 1. The next question is from the line of Sarosh from Vedant Capital. Please go ahead.
Hello, can you hear me?
Yeah.
So I missed your point regarding the your expansion. You've got 48,000 metric tons of capacity. You want to increase it. I missed your bit when you spoke about that. Could you just rerun through that, please?
Okay, sir. So what we stated was that our existing capacity is around 48,000 tons. We already embarked upon a 6,000 metric tons of capex expansion, which we should be in a position to commercialize by end of December 25. So that our capacity available from January 26 onwards will be about 54,000 metric tons.
Okay. All right. Thank you, sir.
Welcome.
Thank you. The next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
Am I audible?
Yeah.
Yes. Congratulations on good set of numbers, sir. And my question is expected growth rate and opportunity size ahead of us, sir, and our differentiator versus competition, and any threat from China in our product range, sir. Thank you very much.
Yeah. So we have maintained 20% growth CAGR for the last 2 decades, and you can see the same number going forward also. We already, put up the vision of 5K, 1K. So it's about upward of 20% growth that you can see in our revenues. What differentiates Privi from other companies is the following. The first and foremost is that we are a very sustainable company. So when we are dealing with export markets, as well as with FMCG companies. It carries a lot of weight. That's the most important thing that we have. Number two, we have backward integration, which gives us enormous strength in terms of our pricing strategy. Number three, and very importantly, we add a substantial amount of margins by internally looking inwards and adding value to our byproduct streams, so that while we are very competitive on our main products, we are able to generate our margins from the value-added products that we make, and we constantly keep on adding products in that category, which is what has helped us in terms of maintaining and improving our EBITDA margin. We have not faced competition from China so far, and we do not anticipate any competition from China going forward. In fact, we strongly believe that China plus one factor, wherein many of our customers have encouraged us to put up products which are currently only made in China, and we see significant demand for such products which are made right now only in China. We see potential for growth in those products, and we are working on those products.
Sir, what I feel is that our sourcing capability indigenously and even abroad from waste to wealth strategy, is it also helping us out, and any difficulty we may face in that in terms of quantum of raw material available for us?
No, we have planned the growth that we have planned over the next 3 to 5 years. We are not seeing any problems in terms of availability of raw material. No.
Okay, sir. Thanks you. Keep up the good work, sir. Thank you.
Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Mohit Jain from Exponent Tribe. Please go ahead.
Hello. Congratulations on the good set of numbers. I have just one question. As our contracts are renewed in October to December period, what will be the price escalation, keeping in mind GPO prices are on increasing trend?
Leave that question to be addressed and answered when we do negotiations for our contracts. We cannot be talking about such a thing, but be sure that we have already told you two things. One is that we add value from our side streams, so that's the very important thing that you must remember about Privi. And the second thing is we are always competitive in terms of putting our products. We can't exactly be talking about the pricing strategy.
It's too early for us to give you the exact pricing of that.
Okay. That is from my side.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Rishi Kothari from Pi Square Investments. Please go ahead.
Yeah, thank you so much for the opportunity. I had two questions. First thing, the target that we have achieved, we have target set for our next 3 to 5 years of 5,000 top line as well as a bit of 1,000. So, what will drive this sort of growth? Are you looking at an industry tailwind kind of a thing, or will be purely internally based on our growth metrics?
It will be purely based on the internal growth metrics, in fact, So we see demand increasing. Of course, as we also indicated and showcased, there are certain capexes that are involved in the next 24 odd months, which will help improve and increase our product basket base. Apart from, of course, all our existing 54,000 metric tons that we will have in our kitty, which is what is going to drive the growth.
I answered earlier question wherein I said that there's a proper mix of products which are volume driven as well as products which are highly specialty chemicals. So it's a proper mix of these two product lines which will drive this growth.
Okay, got it. And apart from that, just I might have missed the question. So the current capacity utilization of our factory is how much?
It's about 92% or so.
Okay, got it. Thank you. I will join back with you. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, in order to ask a question, you may press star and 1 now. The next question is from the line of Rajesh Mishra from Liberty Share Trading Company. Please go ahead.
Hello, I am audible.
Yes, please.
Yeah.
sir. Hello. My compliment to the management for the excellent performance this quarter. I have two questions. Number one is, what is percentage of camphor in your turnover? And second question is, I would like to inquire about the impact of imported camphor on the domestic market. Since imports are significant, has the company explored the possibility of requested any anti-dumping duty on camphor? Kindly share it. Any initiative has been undertaken on this front?
Yeah, so the contribution of camphor in our overall sales is less than 3-4%. Okay, somewhere there, very small. Number one. Number two, you're talking about dumping from China. Yes, that is always there, and there are some steps which we have initiated apart from us, by the industry also, in terms of putting some anti-dumping duty. But it's only about 3-4% of our revenue, so it is not something that is so important. Very significant.
Okay, sir. Thanks a lot. Huh?
Thank you. The next question is from the line of Prachi from Phillip Capital. Please go ahead.
Hello, sir. Congratulations on good set of numbers. Sir, I want a little bit clarity on this 5K vision which we have in next 3-4 years. Can you give us the revenue breakup? How much would be coming from the debottlenecking process and how much would be coming from the new products which we are adding?
So, we are not really giving the breakup between the product categories and all that, but it's a proper mix of debottlenecking. But finally, debottlenecking can only give you so much of growth. The balanced growth will come from new products. And as I have said earlier, I want to repeat again that majority of these products will be sold to the same customers. It's only a question of increasing the share of our wallet. So that's the way it is.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Veer Vadera from Niveshaay. Please go ahead. Hello. Veer, are you there? As there is no response from this participant, we move on to the next person. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Narayan S. Iyer, Chief Financial Officer, for closing comments.
Thank you. Thank you everyone for joining on this call of Privi. We are really indeed happy and to be amongst you and to showcase our quarterly and first half numbers with all of you all. We appreciate your time and showing interest in our company. In case you have any further queries, you can always be in touch with us or the SGA team. We are looking forward to meeting all of you over the next call. And in advance, wishing all my stakeholders a very happy new year for the coming period. Thank you.
Thank you. On behalf of Privi Speciality Chemicals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.